Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, Tuesday, the 14th of July, huge inflation CPI number coming out, and it's down bigly. Huge drop in inflation. We'll talk about that and all that implies. Plus, we had some other news on the war front, and I'd like to take a look at a stock that's been in the news today. We'll do that later, of course, but the big news is inflation. But first, let's talk about the technical picture. Still hovering at highs, guys. We're still bullish. We're still above the 50 here in red. We don't have to bring that in. Nothing has really changed. We're hovering here. Okay, so this is a very nice consolidation at highs, burning off a lot of fear. Okay, so speaking of fear, let's go into the sentiment and back into the fear. We were at neutral and then still at fear because basically the market didn't move. All the sub indices are about the same, and the put call ratio is back to neutral. The breadth is still at fear. I expect it to cycle into greed eventually. Okay, eventually. So we still have the same thing going on. Okay, so let's get into the big news. Okay, it's the inflation numbers. CPI came out. Okay, this is the United States inflation rate month over month CPI down 0.04%. That's the first time it dropped. Okay, and I mean a drop, not here where they were a drop in the rate of increase. No, this is an actual drop. Okay, if we look at the what is it? The inflation rate here. Do we have it? No. Well, CPI here. Maybe that's it. Yeah, you'll see that. Yes, inflation has been going up February, March, April. Okay, but at a slower rate. But this is the first time it actually dropped. Okay, in absolute terms. Okay, this is a big news. So let's go back to the inflation number here, month over month. Okay, 0.0 minus 0.4%. That's huge. Okay, this is because we were suspecting it would go down because of the drop in oil over the past month. So yeah, we expected it to be down, but not this much. This was a huge drop. Okay, and what's even more telling is the core CPI. Okay, core inflation. Where is it? Core inflation rate. Okay, 0. You're expecting, I think, 0.3 or something, and it's at 0. Okay, which means that it's not just oil that dropped, it's everything else too, because core includes, it's non-oil. It's non-oil energy, nothing. So it's other things that are making it drop as well. So this is very, very good news. And if we look at the FedWatch tool, well, in July, the end of July, there's going to be no hike. This is the 3.5%. But in September, they still expect a hike. Okay, but it was much more pronounced. It was much higher than 50 to 41%. The no hike made a comeback. So in September, there's a 50% chance of a hike, which means it's not written in stone. This number has to be 67% at least, 2/3 before the Fed does it. Okay, so now it's up for grabs. And for all of 2026, again, just a 43% chance of just one hike. Okay, I can't believe there's 3 hikes still priced in. 0.6% chance for 3 hikes. But okay, so just to show you guys that the inflation is still, it's a huge print. It's a big print, and it means that stock prices should be ripping. Okay, so why aren't stock prices ripping? That's the big news. Okay, and the reason why, okay, is because inflation is down. It was for the past month, okay, and the reason it went up is because people were already anticipating that it would be down, but not this much. So it did go up, okay. However, because Trump started a war right now, and the Strait of Hormuz is closed, which is the other big news of the day, is that they think that future inflation might not go down if this war continues, and they are correct. That's why we didn't have such a big move, okay, such a big move in the market. And if you look at gold, gold is telling you everything here. Okay, gold should be ripping much, much higher. Instead, it's up a bit. Okay, up a bit. Like if you look at the 15-minute chart, it was up all morning and then it gave up almost all the gains. Okay, this is the morning move. Okay, and it was up all day and then giving it up because as the war continues and it was getting hotter and hotter and hotter. I mean, if you look at the war news, you'll see here that the IRGC vows not a drop of oil and gas will be exported from the region. Okay, so you can see that the fighting is sustained. They're hitting each other back and forth. The good news is that Trump drops the 20% transit fee. The mafioso protection plan is off the table, so maybe that's better for oil. But guys, it's the reason why we have gold down in the 50-minute chart or the daily chart here is because we're not sure about future inflation, and that's why the SPY is down, is basically flat or up small. Okay, had Trump not attacked Iran again, I guarantee you this inflation print, because it was so good, would have been a gap up higher, would have been trading at highs and threatening to go even higher, and gold would have been way bid. It would have given up yesterday's loss and probably traded in the 4,200 range. That's if we didn't have the war. But because we have the war, you have US oil still catching bids, okay, because that's the big move. It's war, because we had the CPI was great, but now the war story is back on. So the future CPI, because these days right here are going to be reflected in next month's CPI, okay, this is what worried the market. The market always looks forward, doesn't care about the past. It re-rates once the past news is coming out. If it was pushed on one side or another, it'll re-rate. But now it's just looking forward and says, this is getting a little bit too hot for me, so I'm not going to give you that reward yet for lower inflation until Trump stops. Okay, it's very clear Trump has to stop this war. Inflation is to be sustained lower. Okay, because now Warsh is still on the table to raise rates, especially since he's attacking oil facilities and everything. So it's all related, okay? The reason why, inflation is down, it's a good thing, but that's not going to be the case going forward if the war continues, okay? And that's the key. We need to have oil down, and we need to have the war end, okay? Because U.S. oil right now, okay, I'm thinking of shorting, but not yet, okay? Maybe a bit higher, maybe till we get some craziness going, because this isn't enough of a premium, okay, to short oil again. Okay, I still have my long-term shorts, but I'm still not pulling the trigger for new shorts, okay? The CPI helped, everything is good. However, the war is still there, and we have to be very cautious, okay? So we do have some trades. Let's go over some of the trades that we did. We do have, let's recap, okay? We have some short-term Micron bid, okay? SMH, why? SMH is bid. So as long as SMH stays around these levels, great. Okay, our Micron short put at 700 is going to expire worthless. Okay, we did a trade yesterday in Bloom Energy. Okay, I liked it despite the hype that's coming out here that it's not going to be a viable technology, or it requires some rare earths from China. But Bloom Energy said, no worries, we can supply that specific rare earth ourselves. We don't need the Chinese supply. So it's hovering, but it doesn't matter. We can just see from the technicals that after this big drop, it found support. Okay, and we entered this trade here that ends on Friday in 3 days. Okay, we think at 190, we short the 190 put, very high IV. That's why we did it. Okay, so all of the trades that we're taking right now that are short term and taking advantage of a high premium are looking like they're going to print. Who knows what's going to happen? But with 3 days left, it's looking good. Let's hope it continues that way. Okay, and today the other big news that we looked at, okay, is IBM. IBM, okay, earnings, they lost by 2.7%, and it looks like nothing here, but the CEO had bad guidance, and they tanked it by like 25%. Okay, now I like this trade. I'm looking because it's down. Let's look at the option structure for IBM. I'm looking for September. Okay. Huge IV, 53%. Even if you go into August, you see that there's a huge percent, 50% implied volatility here in this column on the puts. It's good. This is what you want to see. Okay. And what I'm looking is for the September or August series. Okay. But what I'm looking to do is to short a put in September. Okay, here is the 160. Look at the 160 put, because let's go back to the chart. Okay, once it goes down to, this is a good support level. It goes all the way back. Okay, I want to show you guys, but it goes all the way back. Okay, all the way back to 2013. Very, very long-term support level. So if it ever drops down this level, this is when I will enter a short at the 160 level, and the price will be much, much higher, okay? The reason why we don't enter right now after 1 day is because when you get monkey hammered like this as a trader, you have to wait. It usually takes another day or two before it stabilizes, okay? And if it could drift down to this support level, then you pull the trigger, okay? Not right away. It usually has some momentum to the downside still left to go, and the lower we go, the better price we're going to get for our 160 option. And if we're lower here, we might even go to the 150, okay? We'll have to see, but the strategy is to wait until it hits this support level for a couple more days. Okay, you don't want to get in the way of a falling knife. You want to see some kind of like stoppage of the selling pressure, because you don't know how far the institutions might want to unwind this stock, okay? But it is IBM. It's a legacy stock. You want to play it because it has good fundamentals, quote unquote. But, maybe not good fundamentals going forward, but the risk reward will be worth it if it goes lower and the premiums are higher for these products, okay? And we'll decide upon the structure. I'm looking for a straight out put sale, but we can structure it differently if the situation ameliorates for other strategies, okay? So right now I'm looking to sell a put here, but not right away because monkey hammer, okay? When you get smashed 25%, you want to hold, wait, don't catch a falling knife yet, okay? So that's what I like for IBM. I'm looking to sell a short, but not right away, okay? So look at the 160 for September expiry. Okay, it's very, very far. Okay, we might even go even closer, but we'll see. Like, we have to see at the time what it's trading at, okay? So let's go back. And the other thing today that came out, okay, everybody's talking about is Lucid, okay? Lucid Group. Okay, look at the chart today. You guys see it? Big down move because it's going to go bankrupt. What did they say about Lucid? Lucid crashes on report. It's weighing a take private or bankruptcy. Okay, and then Lucid comes out and goes, the Alex Partners has not recommended bankruptcy. So at first you see the stock rip down, okay, to what is it, $2? Yeah, 250, and then back up to 450. Okay, this stock is, okay, it's very dangerous to play. Okay, like if we look at an example here, okay, Lucid. Okay, let's say we want to go to September. Okay, you get enough premium, or even August, 45. It won't make sense in August, but let's look at September just to see the numbers. Okay, the stock is trading at 450. You would probably look to do the 3 or 450 move. Like if you want to go long and think it's not going to go bankrupt, you would probably like sell the $3 or sell the 4, and then if you want to, and you think it's going to go higher, you might want to buy the 6. Okay, because then you can get some kind of net credit, or you're doing this for flat with upside potential. If it ever, escapes bankruptcy, it gets taken over, the stock might go to $10, $9, $8, who knows? Okay, like if you look at the chart, let's go back to the chart. You'll see that it could go back to $10, who knows? Okay, but because we're selling the 3 put and buying the 6 call, it's not. You can lose $3 if it goes bankrupt, and how much are you going to make? $3-4. So the reward is like 1 for 1. Okay, this is why I don't like playing it with options. Okay, you're basically just rolling the dice. You don't know. Okay, you could do that. I mean, it's not gonna. If you can get it flat, if you can get this strategy, like if you look at the profile, well, it won't show it because it's after hours. Okay, but if you look at the profile, you're basically getting it for flat minus 20 to 30 cents. So basically, maybe if you can get the midpoint, you can do this strategy for flat. It won't cost you anything, okay? But if it goes above 6, you make money. If it goes below 3, you lose whatever that is, okay? So this is why I don't like it. I don't like one-to-one type stuff, especially in stocks that might go bankrupt, okay? We don't know if it's going to turn around. We don't know if it's going to get taken over. It's just too many variables that are not supremely known, or I need more information. Okay, I need some kind of turnaround. Okay, so I don't like playing these kind of plays, is what I'm trying to say. I would not play this stock, even if it's going bankrupt. Even if it's bankrupt, I'm not going to take $3, $4 profit. It's not worth it. Where I could lose 4 if it doesn't go bankrupt, Just not worth it. Okay, so when it comes to Lucid, stay away. I'm not playing it just yet, unless some new news comes out that gives me more certainty and it makes the option structure better, more profitable, more risk reward, however you want to look at it. I just don't like the risk reward at this level. Okay, so let's go back. Inflation down, big news. Okay, I love it. It's very big news. The first time inflation went down and not up slower. Okay, but the market didn't react because right now we're in the middle of a war, and oil is ripping. Oil is ripping, which means that future inflation might be higher. So the market didn't react. Okay, that's what's happening here. Otherwise, it would have been gapped up and go. We also, because of the war. So that's it. And remember, guys. Okay, remember that we are still in OpX. Okay, this is why we entered our trades in mu, our short put in mu and BE that expired this Friday. Okay, we expect it to expire worthless because I expect the market during OpX, even with the war, to be flattish or up, down, non-directional. Okay, so that's why we're getting paid to collect premium for very, very short time periods. Okay, that's it, guys. Let's see what happens the rest of the week. Remember, tomorrow is also PPI, but I don't think that's going to make a big of an impression as CPI did. Okay, so let's see what happens. Will Trump back down? Who knows? Anyways, later, guys.